Thank you very much. Good morning. Assalamu alaikum. And it's great to be here. And thank you very much for the invitation from Jeffrey from the Global Ethical Finance Initiative for inviting me here today. And this is an organisation I've watched develop over the last 4 years. And it's been remarkable how they've stepped into this space, based in Scotland, but really leading on the global stage in terms of taking forward the Ethical Finance Initiative. And I think today is another milestone in that development. I'm primarily here in the UAE this week to lead Scotland's presence at Expo 2020 and participate in a whole range of events at Expo Fringe. Scotland's already delivered significant events over the course of Expo in areas of space, digital, healthcare, and the focus for this week, which is the transition to net zero. And Expo has been a fabulous platform for Scottish innovation across these sectors, spotlighting our global ambitions for Scotland as an attractive place to do business, trade, and investment. And my aim today is to promote Scotland as a global leader in ethical finance, ensuring that the business we do also aligns with our core values for a greener, more prosperous economy, and that we collaborate and build very important relationships with like-minded partners globally. And I'm delighted to be able to take forward that agenda at this event this morning. You've already seen from the short video the position that Scotland enjoys, leading in many of the technologies of the future as we transition to a sustainable net zero world. And we're delighted to be able to take that agenda forward with our global partners. Scotland is very proud that since 2008, we have decarbonised faster than any other G20 country. But to ensure that we can achieve our world-leading climate change targets and a just transition to net zero economy by 2045, we must bring together the private and public sectors to work together for the common good. And to do that, we need technology and finance, and they both need to be deployed at scale. And that's why this event and Scottish organisations such as the Global Ethical Finance Initiative and Greenbackers, a climate tech company that I'm speaking at their event later on this morning, are so important in helping bringing these vital components together: green technology and green sustainable finance. The Scottish Government's National Performance Framework sets our vision for national wellbeing and an overriding aim to ensure that our national outcomes support our purpose and the measures needed to capture our progress towards these outcomes. Our 2018 review of this framework identified a set of national outcomes that even better reflects the values we hold and improves that very important alignment with the United Nations Sustainable Development Goals. And through this, we have national outcomes that deliver for both the environment and for our economy, which of course is the key focus areas for today's events. In Scotland, we see sustainable finance as a fantastic economic opportunity that we must grasp. Scotland already, of course, has outstanding natural assets and a status as the UK's second largest financial centre. We need to build on this and the potential long-term relationships with investors, regulators, and the wider industry to continue to lead the world in the areas of green, ethical, and sustainable financial services. And to do this, we must seek out new opportunities to diversify our financial services industry so that the industry can continue to prosper and grow. So I'm absolutely delighted with the establishment of our new Green and Sustainable Financial Services Task Force. And I know that Jeffrey, our host today, as Secretariat of that task force, have been leading in the setup of this industry-led initiative, and I thank them for their continued work in this regard. It's crucial that we build up on the existing activity within Scotland, so the task force ambition and mission is remarkably simple: to set out the actions Scotland must take to finance a just transition at home and building on our existing strengths as a leading European financial hub, and to leverage that domestic leadership in pursuit of high growth, new export-orientated jobs in a greener, more sustainable and ethical financial services sector. Scotland's financial services industry must continue to play a major role in the delivery of the UK's wider net zero targets, and we continue to press the UK for global action to help build those international standards. Using our leading commercial and policy expertise, we will continue to reaffirm Scotland as a great place for green and sustainable investment. We'll continue to look internationally to build alliances and partnerships so that we can collectively tackle the challenges we all face. As you know, we welcomed COP26 to Glasgow only a few months ago. And while there was real progress made there is still a huge amount of work to be done to get to a 1.5 degrees, and we remain committed to reaching those goals. And our challenge now is to build on the commitments from COP26 to ensure Scotland is seen as a leading competitor in green and sustainable finance. COP26, of course, was a great opportunity to showcase Scotland's strengths in areas of economic opportunity presented by that just transition. And we'll use that to support delivery of our national strategy for economic transformation. This 10-year strategy to transform our economy to meet our net zero and just transition goals. And I look forward to seeing the outcome of future COPs in Egypt later this year, and of course in the UAE for COP28. Last year, Scotland also produced our Global Capital Investment Plan, which seeks to achieve alignment between Scotland's investment needs and the supply of internationally mobile capital. Net zero is at the heart of our Global Capital Investment Plan, and we aim to create a launchpad to attract high levels of private investment. We will also expand our green investment portfolio to bring together projects worth £3 billion in 2022. The current portfolio covers sectors from environmentally sustainable commercial real estate to low emissions transportation and green energy. In expanding this portfolio, we are presenting new projects which demonstrate that Scotland is a world leader in future and innovative green industries. We will also provide investors with the confidence they need to back credible and sustainable projects in Scotland, promoting the range of opportunities within the portfolio, and that plays a key role delivering on our Global Capital Investment Plan and attracting and retaining capital investment flows into priority areas of Scotland's economy. We all stand at a crucial moment in trying to limit climate change, and it's vital that we transform the entire financial system's needs into one that prioritises the environment and locks financial flows irreversibly into a pathway to net zero. That's why Scotland has made green finance a priority, using Scotland's track record of leadership to inspire and drive progress, not just in Scotland, but globally. I'd like to thank once again our host, Jeffy, for this event and the opportunity to engage with fellow panel members and audiences. And I'm very much looking forward to the remarks from my colleague, the Governor of the State Bank of Pakistan, and to the Fireside Chat we shall have later. And then I have to apologise because I have to leave for other events at Expo, but I'm sure you will have a very illuminating and fascinating and productive panel discussion later on. Thank you very much for your time.
Thank you, Your Excellency, for that very insightful keynote. And there is no question that Scotland is a global leader when it comes to the global drive towards achieving a net zero world. And it was fascinating to hear about many of the different initiatives that Scotland is leading on, particularly those that are directly linked to the financial services sector. Thank you for that. And ladies and gentlemen, it now gives me great pleasure to invite His Excellency, Dr. Reza Baqir, the Governor of the State Bank of Pakistan, to deliver his keynote address and officially launch the SDG and Sustainability report. Thank you.
Bismillah ar-Rahman ar-Rahim. The Honourable Minister from Scotland, Graham, our Deputy Governor, Seema Kamil, who's come with me from Karachi to be here with you. Ladies and gentlemen, a very, very good morning to you. Assalamu alaikum. It's a real pleasure to be with all of you here today. Let me just begin, first of all, by thanking Graham, by thanking Fahim, by thanking many others who have been involved in this work, especially on creating the Global Task Force. I think initiatives such as these, where people who are motivated by what is ultimately important for the world, combining important strands of Islamic finance as well as the imperatives of sustainable development goals, when you come together like this and you create such global task forces, it gives central banks like ourselves an opportunity to also be a part of that journey. And Graham, you mentioned the working group that was created in Pakistan, one of the first. We are very proud that we stepped up to create a working group. We are extremely delighted that today we are launching this report on the role of the Pakistani banking sector in promoting SDGs. And I want to really acknowledge and thank my colleagues here from the central bank, GM Abbasi and Samar Hasnan, who were inspired by the work that the Global Task Force has been doing. And I want to assure you right at the beginning, and a message from the very top of the central bank, that as an institution, we remain committed to promoting the work that we can do in our domain towards SDGs, how we can get our banks to promote that cause, and further, how we can get Islamic finance to promote that cause as well. And before I end, as the chairman of the IFSB right now, I'll say a few words also about the role that Islamic finance can play towards these goals. So I want to first give you some background about how this report came about. This was back in 2020 when this working group was launched, and it consisted of representatives from banks, from UK IFC, and from the State Bank of Pakistan. And one of the key objectives of this working group was to put together a report that is in front of you, taking stock of where do banks stand in terms of the agenda on sustainable development goals. I really urge you to take a look at it, and in particular, to look at the survey results, because as part of this report, we surveyed bank officers about their awareness of sustainable development goals and the feedback that they had about their perceived commitment from their bosses, whether in management or in the board of directors, towards SDGs and what role can banks play. And it has some eliminating findings. It also has an action plan. But before I come to the action plan, I want to share with you some of the challenges that were identified as part of this work. Had this working group not been formed, and had this survey not been done, we would not have this good information on the challenges that currently exist. So what are some of the challenges that commercial bank employees in Pakistan have themselves shared about the agenda towards achieving sustainable development goals? First, this is a perceived lack of support and commitment from board of directors and executive management of financial institutions. This is good information, so we know who to target. We need to start from the boards of these banks. Second, lack of the inability of financial institutions to fully translate SDGs into implementable plans. Even where there was awareness about SDGs, there was very little by way of implementable plan that those institutions had. A lack of awareness and serious capacity building constraints of bank staff on SDGs. Commercial bankers need to be trained and we need to build their capacity. So what transpired was really a need for action in several different areas, including building a capacity. And I'll talk a little bit more about that when I talk about the action plan that was developed in this report. Now, as I mentioned at the beginning, we are very proud, delighted that we are launching this report and are standing next to you in this good cause. But instead of now going more into what the findings of the report was, I want to take a step back and, as a second part of my remarks, talk a little bit about what is the State Bank of Pakistan doing about sustainable development goals. And I want to begin by not taking for granted why I'm here. I am, after all, a central banker. And central bankers, in the traditional and conservative interpretation, are focused on monetary policy to control inflation. They're focused on regulating banks so that if the public puts its deposits in a bank, they feel safe, that they can withdraw at will. And they oversee the payment system. Nowhere in this traditional interpretation of what a central bank should do is the mention of SDGs. And it is important to recognize that central banks and governments have their respective spaces to work in. And it is a key responsibility of governments as well to work towards sustainable development goals. I'm mentioning these to you because it is important to begin by asking, what is the right mandate of central banks? Should central banks be in this space, or should they be in the traditional space of the three areas that I mentioned: monetary and financial stability and overseeing the payment system? There is an active debate on this topic around the world. You can look at the US. There is a very strong pushback from certain quarters in the US about the recent initiatives of the Federal Reserve Bank towards green banking, towards environmental issues in banking. We have to acknowledge it is an issue. I want to share where the state bank is in this issue, because different central banks can choose different approaches. And for us, it is very clear that particularly in emerging markets, central banking, like other public sector activities, is a means to an end. And we must not lose sight of that. And that ultimate end for the Central Bank of Pakistan is a prosperous, a sustainable, and an equitable living standard for our citizens. And when there are questions of trade-offs, I think for us, we go back to what is our ultimate objective towards these. In this context, while as a central bank, we do not compromise at all our primary goals of price stability, of financial stability, as well as of promoting growth, we place a great deal of emphasis on SDGs. And it is primarily from this perspective of what is the ultimate goal that a public sector institution should strive for. We do not see a trade-off between what I described as the core set of mandate and areas in the Sustainable Development Goals. Furthermore, I believe that central banks can be very powerful actors to prompt action on these fronts. And there is a key reason why. Central banks, because of their close relationship with commercial banks, can unlock liquidity and finance, can create the rules of the game in the financial sector through their regulations, whereby with a stroke of the pen and without compromising areas such as price and financial stability, they can prompt banks to further cater towards achieving sustainable development goals. And this is not just a hypothetical point that I'm mentioning. I want to share with you 3 concrete actions that the State Bank of Pakistan has taken that will help towards these sustainable development goals without compromising our core mandates, to illustrate our vision and to drive home the point that we don't see the trade-off between the 2 sets of mandates or objectives that I mentioned. First, gender. One of the key themes running through Sustainable Development Goals is to reduce the gender gap in general, but for a central bank to reduce the gender gap in financial inclusion. the Central Bank of Pakistan is, I think, amongst very, very few central banks that has launched a dedicated policy called Banking on Equality, with banking on equality having a double meaning, as in we want more women to bank. And Pakistan is a country where the statistics on the gender balance show that there is a long way to go. So we have used our regulatory space, which is the financial institutions that we oversee, to establish certain targets. And one of those targets is that by 2024, 20% of all employees of the financial institutions that we regulate, and for the state bank itself, 20%, at least 20%, will have to be women. Second, within the central bank, as well as in commercial banks, the need to ensure that women employees have adequate leadership and mentoring opportunities, that they get to have mentors, so that this goal, which is a minimum, is not just a goal that is being fulfilled at lower tiers of the corporate ladder, but one which goes all the way through the hierarchy. There is the requirement for banks to create gender intentional products and to have better gender diversity on customer touchpoints. Now, there are many things in this strategy called Banking on Equality, and I encourage you to visit our website to look at it, because it is Exhibit A in our goal of doing our part towards SDGs. A second key point that I want to mention is the environment. What is the Central Bank of Pakistan doing for environment specifically, using the tools that it has that other public sector institutions don't have? But central banks are unique in one way. They have one power that no other institution in the country has, irrespective of the country that you're talking about. And that is the power to create money. Unlike commercial banks, central banks create money simply by crediting the account of a commercial bank. We have been using this power for a financing scheme for green energy, where we lend to a commercial bank and we tell our commercial banks, here is a total envelope of resources that we will give to you, which you in turn can lend to the private sector for green energy, whether it's solar, whether it's wind, whether it's water, but green. You as the bank will determine whether the project is viable and whether you think you will be repaid in full and on time. But should you decide to go ahead, and I guarantee you there has been overwhelming demand in this initiative, you don't need to mobilize funding elsewhere. We as the central bank will give you concessional finance. During COVID, the term quantitative easing became very fashionable, where central banks were essentially printing money and central banks were buying government debt. In the State Bank of Pakistan, we have not been buying government debt in primary auctions, but we have used quantitative easing for very targeted support. This way of supporting green is for us very appropriate because it's very targeted. The bank, as a regulated institution, has to ensure that the money that it is lending is for these green purposes. Otherwise, they don't get the money. And if we have to give concessional finance, this is a good cause for us to give. And this has supported, since this program started, tens of billions of rupees of investment in solar and other green energy. So, and this is Exhibit B of some of the specific actions that we have taken. My last example is the goal of addressing wealth inequality, particularly in countries, in developing countries, wealth inequality is very pronounced, especially because of the disparity in the ownership of real assets, and in particular, housing. It's a very, very, very tiny fraction of Pakistanis who own their own house. And if you don't own your own house, you don't have collateral to access the financial system often, where you can then even decide to start a small business. What this means is that if the situation just continues the way it is, some, and the most, will never, ever be able to compete on an equal footing with others. So my third example is of a very concrete intervention that the Central Bank of Pakistan has been doing, working with the government to get banks to provide mortgages for low-income people. And the way this is targeted is that the only way the bank qualifies for this subsidy on the interest, as well as principal insurance and risk coverage, is if the house that is being bought is smaller than a certain square footage. And this is self-selection, because we know that rich people will never live in small houses. There's no cap on the price of the land or the house. There is only a cap on the size. And as long as the bank is lending towards that, they're going to get cheap money for these mortgages, which are fixed. And we went further and we had targets for banks. I myself have chaired 45 meetings of a steering committee that I lead with the heads of many commercial banks that is designed to promote affordable housing. Our Deputy Governor, Seema Kamil, has been leading this initiative in the central bank together with Summit. These are three examples of what I wanted to mention about the role of central banks and how for Pakistan and for the Pakistani central bank, not only do we not see a trade-off, but we are embracing the goal of the spirit of sustainable development goals. I will skip what I wanted to say regarding the action plan because I have overstepped, I think, the time that was allocated to me. But I do want to just mention very quickly, as the Pakistan right now has the chairmanship of the Islamic Financial Services Board. And I do not have as much space here to talk about the work that the IFSB has been doing in the spirit of sustainable development goals. But I want to tell you that as the chairman of the IFSB for this year, my team and I, we are very much looking forward to continuing to push the agenda that the IFSB already has on using Islamic finance towards achieving SDGs. So at the end, let me say one thing. I shared with you examples of this particular report on sustainable development goals and what the Pakistan banking sector can do. I shared with you 3 specific examples. This is not an exhaustive list. There are many other areas of how the Central Bank of Pakistan is using its tools under its mandate to promote SDGs. But the biggest point I want to leave with you is that I'm here with you today, together with our Deputy Governor and 2 of our senior officers, to drive home the point that we are your partners in the work that the Global Task Force is doing in this good cause. Ladies and gentlemen, thank you very much for your time.
Thank you very much, Your Excellency, for a very, very interesting, insightful speech, not only talking about the key outcomes of the report, but reflecting and providing context as to the role the central bank can play in driving policy forward, and sharing 3 fantastic examples of practical initiatives that can be used to help improve different areas of the SDGs. Thank you very much. With that, ladies and gentlemen, we'll move to the Fireside Chat, and it would give me great pleasure to invite His Excellency Ivan McKee and His Excellency Dr. Reza Baqir to the stage, along with Graham, who will be the moderator for the chat.
Thank you. Well, thank you both very much. Can everyone hear me? Thank you both very much for your contribution so far. We're probably compressed a bit the time for this discussion, but I think the insights we've had from both, thank you. The insights we've had from both of you are such that we have already covered some of the ground that I would have been touching on in this discussion. So it's certainly not a loss of time. But we hopefully have time for at least one topic to discuss. And I'd really like to just move forward again on the SDGs to begin with, that both of you have already touched on, obviously, in some detail, and which are at the core of what we're talking about here. It's worth perhaps just mentioning that both of the countries represented have been in it to a degree pioneers in the field. Pakistan has been one of the first countries to adopt the 2030 implementation agenda for the SDGs, and Scotland having, I think, perhaps uniquely integrated its the relevant SDGs with its agenda for government, which is the National Performance Framework, as it's called. So clearly, these are, from your different perspectives, both at the core of what you're engaged with. But it is conspicuously clear that very large sums of money are going to be required if indeed that agenda is to be met. And much of this is going to have to come from the private finance and investment world. So I'd just like to hear from both of your perspectives as how you see that the private investment world should be moving forward and what they should be doing about it.
Yeah, thank you. So thank you, Graham, great question. And you're right, we've integrated the SDGs into our national performance framework, which guides all of our government policy, and that's hugely important. The role of private finance is absolutely critical. It became, I think, my biggest takeaway from COP26 in Glasgow, where I met with many businesses and investors, was that there is a huge willingness to invest money in that sustainability and the transition to net zero, but there's also a lot of uncertainty about how best to do that. So I think the first thing to say is there is a tremendous amount of capital out there, both from a capital investment point of view, but also very large global businesses who know that they need to invest in a new direction, but they're not quite sure where to invest. That's the first thing. The second thing is that huge amounts of capital are required, and the numbers are just staggering. In our context, it runs into, for a small country like Scotland, tens of billions over the coming years. So clearly the public sector is not in a position to do that itself, and we absolutely recognise that. So then it comes down to how do you align what needs to be done? How do you give private investors the confidence that they are doing the right thing, and it's also going to return the investment returns that they require? And I think government's got a huge role there by being an active player on the field of play, engaging with the private sector investors, understanding the very different risk reward profiles that are out there. Venture capital has got a very different risk reward profile from sovereign wealth and so on and so forth. So understanding what that market looks like, understanding what it is we've got to offer, and being very clear about what we're good at. In the case of Scotland, we understand the technologies we're good at, the investment opportunities we have, what they're going to deliver. Been very clear about the frameworks within which that operates, so that businesses understand that what they're investing in is taking us on that journey. And also, very importantly, for example, through our Scottish National Investment Bank, through the investments that Scottish Enterprise and others makes to put public money in to partner with and leverage up much more significant amounts of private money through cornerstoning or partner investing. And I think that having that skin in the game gives private sector investors the confidence to be able to make the significant investments they need to make. So it's not an easy journey, but I think it's a journey where we've got clarity on how we approach it. We're at the beginning of that journey, and we're very keen to partner with others that have a similar approach.
Thank you.
Governor.
Yeah, so let me first acknowledge that this is a very big challenge for Pakistan and for many developing countries as well. And just to put some figures, it is estimated that Pakistan would require an additional 16% of GDP by 2030 from both the public and the private sector to achieve SDGs in critical sectors, 16% of GDP. Our tax to GDP ratio right now is 11% of GDP, and our current investment to GDP ratio is around 15%. So this would essentially mean doubling the investment ratio of Pakistan. And the question becomes, where do we generate this magnitude of financing that is needed? Before talking of a couple of general points, I want to give some specific examples where both the public sector and the private sector has been making some efforts towards raising financing towards SDGs. Our Water and Power Development Authority, WAPDA, recently issued a $500 million green bond, which is a bond, just a sovereign bond, that is going to be used for money for clean energy using hydropower. We have another initiative from the private sector, which is a social impact bond issued by U Microfinance Bank. This is the first social impact bond of 3.5 billion rupees. And the proceeds of this bond will be used towards financing renewable energy, private school loans, low-cost housing, and SMEs, primarily in rural Pakistan. So these are a couple of examples, but $500 million on the one hand, and then 3.5 billion rupees, given the goal that we have, is a drop in the bucket. We will continue with all of these initiatives, but I do feel now as a policymaker and as a central banker who has had to work in a team of the government to steer the economy out of the COVID crisis, the setback that emerging markets like Pakistan have suffered because of the challenges posed by COVID. The UN report had already shown that the world as a whole is falling behind on SDGs. This is before COVID. And then comes COVID. And the amount of resources that had to be devoted just to prevent a complete collapse in the world's fifth largest country. And then on top of that, as the world recovered, and particularly demand in advanced economies recovered, the rapid increase in commodity prices, and now the Russia-Ukraine conflict that has driven up the cost of borrowing for emerging markets. It has been one blow after another. And as a central banker for the past 3 years, dealing with these blows has just made it harder and harder for us to contemplate how are we going to raise the kind of resources in international markets. It's an area where I think international institutions need to step up, and they need to identify a way in which, for countries like Pakistan, where the goals of SDGs are facing further challenges because international capital markets are closing on them for reasons not having to do with them. COVID was an exogenous shock. The increase in global commodity prices is an exogenous shock. The Russia-Ukraine conflict is an exogenous shock for a country like Pakistan. None of these has anything to do with anything that Pakistan may have done. But what is the consequence? Oil that we import, which is 1/3 of our total import basket, has more than doubled, which means that our current account deficits are rising. Private capital markets have closed towards practically all high debt emerging markets. Pakistan is one of the only countries that actually reduced its public debt to GDP ratio during COVID, but still having a considerable debt to GDP ratio means that because of this very fragile global investor sentiment, capital markets. So where is that 15% of GDP going to come from? And what is the role of the international financial institutions to help emerging markets, which have been bystanders, but have really suffered from these series of exogenous shocks? I think is a question that needs to be put on the agenda of international financial institutions. Thank you.
Thank you very much. I think you've touched on a lot of very strong, relevant points that it takes me on to. I think we've time to just have a very, your mind is a bit looking nervous. Just before we let you go, just as a sort of follow-on from that and the point you've just touched on with the pressures that COVID and now the war in Ukraine is causing, how do you see the imperatives that have come out of COP26 and where the investment industry needs to be focusing on specifically to advance the agenda from that and the Glasgow Climate Pact, etc., that emerged? Is that still a realistic prospect, or are these events making this proceed further?
I think, to be honest, it will depend where you're looking at this from, and it's very illuminating to hear from the government about the challenges facing Pakistan and developing economies, which have been obviously compounded by recent events. But I still believe that the intent is there very strongly from investors, not least because it's not just because it's the right thing to do in the medium and long term. It's also because there's a very strong recognition for lots of reasons that is the direction of travel. And if you're looking for sustainable investment, never mind just purely financial terms, that positioning has to evolve and change. So I think that recognition is there. And to be honest, the tragic events in Ukraine have placed further compounding shocks onto the global financial system as a consequence of commodity prices and so on. But they've also, I think, highlighted, and this is our perspective on it, we need to accelerate that transition to more resilient and secure energy sources that are renewable sources. So I think that imperative is absolutely still there. But I don't imagine or pretend that there aren't huge difficulties in the journey that we need to take. So at the start of that journey, we're very clear on where it needs to go. I think that, as I said, the money is there and the intent is there, but making sure it's got the right routes to those sustainable investments, I think, is the challenge that we face.
Let me first applaud the work that was done in Glasgow, and particularly the Glasgow Financial Alliance for Net Zero and the commitments and the targets that have been established. And Pakistan, as I said at the very beginning, is very much a partner in these efforts, and we will do everything that we can towards these goals. I mentioned already some areas where our private sector is identifying ways of mobilizing financing towards achieving these goals. As a regulator, we will continue to do the regulatory changes, including green banking guideline changes that we are doing, so that we, at least at the level of the operation of our commercial banks, internalize the goals that have been established in the Glasgow Financial Alliance for Net Zero. But I want to go further, and I want to say that, look, I gave you an example where the Central Bank of Pakistan is giving concessional financing towards private sector projects for climate. And these projects, which the banks are financing, are profitable. They are not generating losses for banks. Banks are making money on that. So if a Central Bank of Pakistan can provide such concessional financing for such projects, I think it would be very, very useful to think about how international institutions could directly provide such funding towards private sector green climate projects. Where it would help us is that instead of generating rupee funding, which then means that it has to be converted to dollars to import a lot of the panels or other material, the international institutions would be lending in hard currency for such projects. And if already these private sector projects are very profitable, it should be a green light for international institutions to identify some way in which their investments are protected, as well as we promote the cause of climate. So again, I would encourage, I think, through the work of areas, institutions like the Global Task Force, to make awareness, a push, concrete ideas, concrete schemes for such hard currency financing, for green issues. Leave the government out of it. This can be directly to the private sector. We already have a private sector that is doing profitable investments. We need somehow to come together to get them to tap hard currency funding. Thank you.
Thank you both very much. And I think the joint point to be drawn there is that you know, wherever you are in the world, where everyone is facing very strong headwinds at the moment, but it's good to hear that there are still commitments and still reasons to be cheerful. So can I, on your behalf, ladies and gentlemen, thank very much the Governor and the Minister for taking the time today. It's extremely grateful you've been able to fit us into your timetables, which I know will be extremely busy, and hope the rest of your days go well.
Thank you very much.